Hi, and welcome to this WACEO coverage. My name is Asmo, and today we'll be having a closer look at some of the legal and regulatory challenges faced by Deus Finance. So without further ado, I'd say let's get started. So first of all, what is Deus Finance? Deus Finance is a DeFi protocol which essentially allows for the possibility to tokenize any quote, asset on the planet and trade it on the blockchain. In practice, it works the following way. Users can create so-called dAssets, which are pegged one-to-one to their real-world equivalents. From then on, these assets can be traded on Deus Swap, a decentralized exchange, where pricing of the assets is determined by the Deus Oracle. Next to creating / issuing dAsset tokens, Deus Finance issues a number of other tokens, as can be seen here. As you have, for instance, the value token. It's a Deus token, which is a proxy for Ethereum, acting kind of as a store of value within the ecosystem. Then we have a utility token, the DEA token, which can be used to decrease trading fees or get access to special services. Deus also issues a reputation token in the form of a time token, which shows a user's reputation based on how much time they have given Deus by providing liquidity in the vaults. And then we also have future tokens, which are fairly interesting. These are tokens representing a speculative value of the potential IPO underlying asset. This allows users to speculate on the price of an asset as soon as it is announced before the actual IPO date. So a lot of interesting tokens there. Let's have a look at some of the applicable law and liability next before diving in deep. As per usual, it is useful to recall some of the general principles concerning jurisdiction, which might be applicable. We have, of course, a territorial principle, which is, in essence, the right of a state to exercise jurisdiction over matters occurring on its own territory. Fairly simple. We have the active personality principle, which is the right of a state to exercise jurisdiction over their own citizen, irrespective of the territory they are in. And we have the passive personality principle, which is the right of a state to exercise jurisdiction over a person harming its citizen. So depending on the jurisdiction you're dealing with, one of these principles might apply. The current legal status of Deus Finance is actually unknown. It is unclear whether there exists a corporate structure which develops the platforms and services itself, or whether it is developed by a community of people. To the same extent, it is also unclear whether the Deus DAO has been legally incorporated anywhere in the world where directly permissible, or through other corporate entities, for example, the Cayman Islands or Wyoming. Regardless of its status of incorporation, though, to the extent that Gnosis operates within the territory of the European Union, EU law will apply. Given this, the most likely scenario is that that any legal claims against Deus Finance or Deus DAO would potentially be directed towards any identifiable members themselves. In this case, the persons targeted would most likely be those directly identifiable as contributors via Deus Finance's website. Given the information which this coverage is based on, it is very likely that any single member can be held liable on behalf of the entire organization in question, as there does not exist an entity onto which liability could be transferred. For instance, under EU law, all DAOs are considered as general partnerships, where the respective members are considered as partners and can be held jointly and fully liable on behalf of the entire organization. So let's have a brief look at some tax law next. As Deus Finance or Deus DAO does not appear to be a registered entity, serious concerns regarding tax compliance can be raised. It is really unclear to what extent and where Deus Finance would need to pay taxes based on its operations. Finally, each person exchanging tokens via the Deus exchange should be aware of their tax obligations under their respective jurisdictions for any earnings made. So becoming compliant with local tax requirements will really be an important issue and can be a real regulatory risk faced by Deus Finance down the line. Moving on to some GDPR issues. With regards to DAOs, GDPR compliance can be quite challenging. Following the GDPR, both a data controller and a data processor can be held accountable for violations of their obligations under the GDPR. When applied in the context of Deus Finance, essentially any member could be regarded as a data controller and or a data processor and be held liable for a breach of the GDPR. As the contributors to the Deus DAO are fairly easy identifiable, contributors could be jointly fined up to 20 million euros for any violations. In summary, as with many other current legal frameworks, though, the GDPR is not really suited to deal with DAOs at the moment and can therefore carry really substantial risks for them if applied in its current form. One smaller thing that should also be noted is that Deus Finance does not outline or describe their commitment to data protection or their commitment to ensuring GDPR compliance. Moving on to financial regulation. Well, under current EU regulation, crypto assets or certain services related to crypto assets could be regarded as financial instruments depending on their function and their characteristics. Some crypto assets that may fall under existing EU financial regulation are, for instance, tokenized financial instruments, such as securities, for example, tokenized shares or bonds, tokenized funds, for example, property funds, certain forms of tokenized fiat currency, for example, a fiat-backed stablecoin issued by a European stablecoin issuer under e-money legislation, tokenized deposits, for example, a bank issuing tokens against its deposits, or tokenized B2C or P2P credit offerings or platforms, so non-bank B2B corporate lending and borrowing often being out of regulatory scope of financial regulation at the moment. Given that Deus Finance is, according to its own mission, tokenizing anything regardless if a person, the SEC, or company wants it or not, it is likely that some tokens will fall within the scope of the Markets and Financial Instruments Directive, in short, MiFID. Moreover, these tokens are classed as transferable securities as defined in Article 4.1 of MiFID, and or certain requirements concerning scale and operation are met, and unless certain exemptions apply, there's also a lot of other EU legislation that may be applicable. For example, the Prospectives Directive could be applicable. You could have the Market Abuse and Short Selling Regulation apply. The Transparency Directive, the Settlement Finality Directive, the Central Securities Directive, and the Alternative Investments Fund Managers Directive. All of these could come into play if it is seen as a transferable security, or if it's seen as a transferable security. Depending on the applicability of the regulations and directives listed above, a number of requirements could potentially apply. On an EU level, though, or additionally, on an EU level, all providers engaged in exchange services between virtual currencies and fiat currencies have to comply with the same AML KYC requirements as banks and other financial institutions. However, it does not seem as if any of these requirements apply to Deus Finance at this stage, which would basically exempt them from the requirements found in the European Anti-Money Laundering Directive number 5. So finally, let's have a look on some future regulation, namely the European Commission's regulation on markets and crypto assets, which is still a proposal. Although there is no official timeline available yet, it is to be expected that this regulation will come into effect by 2024. While the contents of the regulation are not final, the proposal by the Commission gives a fairly good sense of what to expect with regard to the regulation of crypto assets and their service providers on an EU level. Due to its legislative nature, MiCA will not have to be implemented into the national law of the individual member states, and will automatically take effect in the entire EU. Moreover, any non-EU company wishing to do business in the EU in the field of crypto assets and which does not fall under any exemptions, for example, will also have to abide by the regulation. As we saw in the beginning, Deus Finance is dealing with a number of different tokens. And some of these tokens would certainly fall under the proposed MiCA regulation and be classified as utility tokens, for example, the DPA token or asset reference tokens. That would be the dAsset token or the Deus token. Moreover, Deus Finance could be regarded as a crypto asset service provider, in short CASP. However, to the extent that Deus Finance would be seen as issuing assets regarded as financial instruments, MiCA would not apply. Essentially, this means that the potential applicability of MiCA relies on whether or not Deus Finance is currently seen as issuing assets regarding as financial instruments under MiFID. Definitively resolving this issue would require a little bit further research, but there is this open question. Nevertheless, if Deus Finance would be regarded as a CASP, Section 5 of the proposal will likely be the most important one, as it concerns the authorization of CASP. For instance, in order to provide crypto asset services, companies will need to receive prior authorization from competent member states. And additionally, a number of other regulatory requirements will have to be met by CASP, for example, insurance coverage, training of staff, and so on, depending on their business model, capital, or internal governance structure. Among other business operations, one could also assume that Deus Finance could be seen as operating a crypto trading platform. This would, under the proposal, mean that a minimum capital of 150,000 euros would be required. Moreover, other requirements and regulations may apply. For instance, operators may not trade on their platform with their own account, and the platform must continuously publish bid and ask prices, as well as transaction volumes. So these are some extra requirements for this specific type of operator. Given all of this, when joining a DAO, the members should really be aware of not only the technical side of and functioning of it, but really also the legal and regulatory risks. And really becoming compliant and ready to face future regulatory challenges, and also complying with current regulatory requirements and legal requirements is incredibly important and really a cornerstone to further success in the future. And this is really where WACEO comes into play. WACEO is establishing a nonprofit association and has as its mission to build a trusted environment where compliance-seeking DAOs can interact with competent service providers, which can then support them with legal advice. And basically, these short coverage really just are supposed to give a brief overview of some of the really evident issues that can be seen from a third-party perspective when looking from the outside. There could be also more issues when conducting a more thorough audit, but essentially WACEO just aims to give a good overview. Okay, what are some of the issues that should be worked on and what could be worked on together in the future? So that is actually it for now. Thank you so much for your attention, and I'll see you next time. Bye.